Welcome to this coverage of the BOE and your your ECB decision really. Now, um, what are we supposed to be watching out for? What are we looking at, guys? We've already seen the BOE's decision, of course, and we really did not have anything new. Um, as expected, the BOE kept its interest rates steady at 0.5%. The asset purchase facility remained at 200 billion. And as expected, we find ourselves with very little response from the market. Excuse me. Now, despite the lack of response from the market, there are actually considerations that we should have. Um, over the last couple of days, over the last couple of weeks, we have seen a sea change in markets' expectations about UK policy. Before, we used to think that by August, at the earliest, you may have a rate hike in the UK, latest October. Well, people are now thinking, you know what, maybe the earliest rate hike will be in February, probably March, because of the weaker numbers that we have seen the past few weeks out of the UK. People are thinking with people are thinking there will the BOE Mervyn King will be in no hurry to tighten to raise interest rates. In fact, people are thinking if there's any risk at all, it will be for the BOE to actually adopt quantitative easing too, to do its own quantitative easing program, maybe expand the asset purchase facility by another 50 billion. Okay, so why am I pointing out BOE issues? Well, because we are expecting a rate hike for the Eurozone. Now, the last time that we've done this coverage of the ECB decision, we were looking at charts. We were talking about how this interest rate hikes would impact the decision, the views of bigger traders on where to put their money. Now, I'm not going to do that in our session now, but I'd like to point out the differing policies that the UK and the Eurozone has. We've just mentioned that expectations for UK monetary policy now calls for a rate hike only in 2012 in the first quarter. And as far as the Eurozone is concerned, we are expecting a rate hike later. Now, if you were to compare then your euro and your cable, if you're an ordinary investor, if you're someone who is just looking for where can I get more bang for my buck, then you probably will be telling yourself the euro would be the place to go. Put money to European banks, provided that there's no risk that any of the banks will be closing. Of course, the environment that we are in right now is very difficult. Not only are we considering interest rate decisions, but you also have to consider just how sound is the bank that I'm doing business with. Just how likely that the bank will still be there next week, next month, next year. Okay, it's a different issue, but this is clouding the way we look at this interest rate decision today. In classic textbook theory, I would have expected that, or I would expect that with the change in UK policy, with the UK turning more dovish. In fact, let me open FX Street's website. I think I was browsing it earlier and I saw an article about this. Let me just show it to you folks. Where is that? Ooh, looks like that news is no longer there. Give me a sec. I'll just look for that particular report. Okay, I lost it, but there was something about this earlier in the FXT website. Anyway, so what am I saying, guys? What I'm trying to point out is that normally, under textbook conditions, if you have a rate hike somewhere and a rate cut somewhere, then, or rather a steady rate, a dovish policy somewhere, then you should be thinking in terms of people shifting their funds to that currency where the monetary policy is hawkish. And right now, we can point to the Eurozone and the UK as having opposite or opposing policies. A month ago, people were thinking that by August, we will get a rate hike in the UK. Now, people are thinking we will get a rate hike in the UK in March 2012. So what does that tell us? Policy in the UK, or at least the outlook in the UK, has turned dovish. So, on the one hand of our euro-pound pair, we have a currency cable that's seen as likely to remain weak, okay, or even weaken because of its monetary policy. On the other, you have the Eurozone, where where Jean-Claude Trichet was good enough to confirm for us last week that he will be raising rates today. So, in textbook theory, we should be thinking euro should strengthen. So what I'm trying to point out is, if you're looking for a pair to trade with respect to this rate decision by the Eurozone, one of the options, one of the choices should be your euro pound. Because on one hand, UK is turning dovish while the Eurozone remains hawkish. So for me, classic textbook theory would tell us that our EUR GBP should actually be pushing up. Or the market's knee-jerk response to the rate decision would be to see your euro pound rally. Now, we said earlier that there are problems to consider. What are these problems? We live in a world where you've got risks of bank closures these days. We live in a world where hearing about ratings downgrades seems to happen every week. In fact, let me point something out to you folks. Before or last week, Monday last week, when we heard from ECB President Jean-Claude Trichet that he still has strong vigilance. When we heard that phrase strong vigilance from Trichet last week, what happened to the currency market? We saw our euro rallying across the board. If it were not for news coming out over the weekend, coming out yesterday, we probably would be facing the euro right around the highs on Friday right now. But of course, things caught up with us. We had the credit rating downgrade for Portugal. We've got ratings agencies saying that the plans for Greece most likely would mean that they're going to call it a selective default. So this issue, credit ratings downgrades, the possibility of labeling Greece in default by the ratings agencies has clouded what's supposed to be a nice trade. The only thing that I welcome about what has happened is this. Because since Monday, when we heard about the technical default story for Greece because of yesterday when we heard of the credit ratings downgrade for Portugal. We actually saw the euro easing off across the board. Our EUR-USD ease off, our EUR-JPY ease off, our EUR-GBP ease off. That we can actually argue that going into our ECB rate decision now, surprisingly, we are market neutral, or we are market is euro neutral. What do I mean by this? Because, okay, last week when we heard Trichet say that use the word strong vigilance, markets rallied, we were doing some buy the rumor. Normally, buy the rumor sell the fact would have meant that today, when we get our interest rate decision, we are going to be a little bit uncertain. We're going to have a risk of a big sell-off. But that possibility of sell the fact has been preempted by the Greek issue, by the Portuguese issue that has sounded the euro from Monday, that has sounded the euro yesterday. So when I look at the market now, I tend to think, you know what? Buy the rumors of the fact it's not likely to happen because people who already bought have gotten out of their position. If you look at your euro pairs across the board, you will find that if you plot a fib in the rally for euro last week, in most of the euro pairs, either you see yourself at 61.8 fib retracement, which is what we have in EUR-USD, which is what we have in EUR-GBP, or you will find yourself around the 50 fib retracement area, which is what we have for Euro-Yen. Now, what does that all mean for me? It means that because we've got people already getting out of the market, buy the rumors of the fact is not a concern anymore, and that if indeed we get our rate hike, and indeed when we hear Jean-Claude Trichet talk later, and he continues to talk about monitoring market conditions, he continues to talk about maintaining strong vigilance, he continues to talk about a focus on inflation, then to us that would be cue to think in terms of let's do the textbook response to a rate hike. Let us look for the possibility of our EUR-USD, EUR-GBP, EUR-JPY spiking. There is of course a caveat to this idea. That caveat is, right now, markets are concerned about default issues, about credit ratings issues. Now, how do we tell ourselves that, hey, we really shouldn't be too concerned about default? Your credit ratings downgrade is an old story. That was yesterday. How can I tell myself that it shouldn't be a big concern? One way of doing so, look at the equity markets. What are we doing today in European equities? If you look at your equity charts, you will find that European equity indices, for the most part, are in positive territory. We're not exactly getting a big rally. Let me just change views. We're not exactly getting a big rally. But for many of the European equity indices, we are in plus territory. And because we find ourselves in plus territory for these European equity indices, I can argue that we don't have a big concern for the default story anymore. I can argue that default issues are yesterday's news, and that I better focus on what is current on what is our big issue today, and that is your rate decision. So I can effectively, what I'm saying here, guys, is that I can argue that when we get our rate hike and when we hear from Jean-Claude Trichet that he remains vigilant, then I can go textbook and look for a bounce up in the euro, a bounce up in euro yen, a bounce up in euro pound. Now, some people have been saying, you know, you might find yourself looking like an ass by arguing this. Clearly, the trend for your EUR JPY, the trend for your EUR GBP, the trend for your EUR USD has been for a bear market throughout the week. We've been dropping and dropping and dropping ever since we tried to spike Monday and failed to sustain that spike in the Asian session. Well, my answer to that is, so what? I might sound an ass for arguing that we could get a bounce, but if I look at things from a technical perspective, if I look at things from the textbook, the arguments are there to call for such a move happening. Just a cautionary note here. Whenever you do take a trade, always remember to put a stop loss somewhere. So I'm planning on taking the long side of our euro pairs. I tend to think that jumping ahead of the market is a risk worth doing. But I would suggest that people actually confirm the rate hike first and confirm that our bigger traders are jumping in, taking the rate hike as a good excuse for pushing our pairs up. So technically, what are we seeing right now? Let's talk about euro. And what do we have? You know, when you look at the big picture, you look very bearish. Below EMA lines, sell signals, some indicators. But I would point out, we are just around 61.8 fib. We have had plenty of opportunity to sell off today, and yet we're just stuck around that 61.8 fib area. Again, at a time like this, when you've got data that could potentially change the opinions of the market, indicators are not really a big concern. Chart patterns are not really a big concern. When you've got data getting released, the only technicals that would work for us are support and resistances. And as I said, I like the fact that we have stayed above that or around the 61.8 fib level throughout today's trade. I can view this market as a currently euro neutral market, and I'm thinking if no one is overly long or no one is overly short, if we are market neutral, then I can go textbook. And textbook response for any rate hike is to expect that currency to strengthen. Okay, so looking at euro, I'm thinking, can I get a bounce later on from that 61.8 level? If you plan on joining the long side, just be ready to put a stop loss about 10-15 pips below the day's lows. Why use a tight stop? Because interest rate decisions tend to be periods of volatility. I'd want to use a tight stop just in case some crazy trader who has billions of money decides to actually short your EUR USD. I don't want to have the market gapping down on me just because some big trader decided to sell it. So I will use a tight stop. But my preferred strategy going into this is to go textbook, consider the possibility of pushing up. We're not going to jump in now. If you want to preempt the market, do it in the last minute or two before the release. The more prudent course of action would be to actually wait for the decision to come out, to actually wait for the algo traders to see their trades executed. Excuse me. Now, do we hold the view of let's look for a bounce in euro across the board? Actually, there's one euro pair that I think we should just avoid. What is that? Well, you've got your EUR AUD. Basically, we have a strong Aussie. We've had good data from Australia earlier today. When I look at EUR AUD, I tend to think that's a combination of two strong currencies. So it might not be a good idea for me to consider taking action there. By the way, we seem to be moving at the moment, and we actually have our euro easing off, testing our supports. Does that invalidate the notion of taking the long side once we've got the rate hike? To me, not really. Again, I would expect that we will get some volatility ahead of the numbers. What matters is that once I have the rate decision, I actually see whether market response is going to be textbook or not. For now, we tend to think that buy the rumor, sell the fact is not an issue. We have already seen buy the rumor last week, and we have already seen sell the fact. Well, we cannot do sell the fact because we already sold going into this release. So let's not get too excited about our attempts to push lower minutes ahead of the release. What matters is what happens in the next 5-10 minutes after your data does get released, after your decision does come out. Other issues, of course, what will Jean-Claude Trichet say once the ECB press conference starts? We would like Jean-Claude Trichet to focus on inflation issues. We would like Jean-Claude Trichet to talk about strong vigilance, to talk about monitoring the markets. As long as he sticks to that old formula, then that tells us that that ECB policy remains hawkish. Okay, so we're clearly easing off at the moment. I wouldn't look at this as a good idea for people to jump short. If really we've got someone big dumping this market, if really we have big traders already joining, you would have seen a big sell-off already. At the moment, I would just swear away. I would just stay away from the attempts to have your euro drop. Let me check though. I'm starting to think, is there any fresh news that that's leading to this weakness? One of the concerns that I always have is there any new data, any new report, any new announcement? That's one problem that we have for the euro right now. We are susceptible, we are vulnerable to talk of defaults, talk of credit rating downgrades, talk of CDS spreads widening. Yep, there's actually a link for that. If you want to watch the press conference later, let me get it. The announcement will be in about 11 minutes from now. The press conference will be 45 minutes after the announcement. I would prefer really jumping in maybe a minute or two before the announcement and then put a stop loss tightly below the entry. Okay, let me just get the link for the press conference. Okay, we'll have to wait for the links to get updated. There you go, Vishal. Press conference is going to be 45 minutes after the rate discussion. All right, folks. So we are just about 9 minutes away from the rate decision itself. Again, we've all known that there will be a rate hike since June. This idea of a rate hike was reconfirmed for us by Jean-Claude Trichet last week, Monday last week, in fact. And when he reconfirmed the rate hike for us Monday last week, we saw our euro rally. Now, the situation has changed from Monday last week to this week. Monday last week, we didn't have any announcement of... I would view that as mere market noise. Again, if big traders were really positioning themselves, we would have gotten off. Okay, what do we know? We know that we've already sold off in euro pairs from Monday, Tuesday, Wednesday. So the sell the fact part of buy the rumor, sell the fact to us really doesn't sound like it could still happen. You've seen 61.8 fib retracement of the rally for your pairs last week. Now, some guys would argue we have known about this if you're in at okay, you went in at 43 earlier. What I would look at is maybe putting a stop under the day's lows. Personally, if it were me, probably I would just hold it. It really depends on your normal risk reward. It depends on what your normal stop loss is. I doubt that we could get a big sell-off on this issue. If you're worried about this position, market volatility following the release could probably allow you to get out at break even. Well, the textbook response is for market to rally on an interest rate decision, if that interest rate decision is unexpected. Okay? Now, this interest rate decision is expected, but people who priced it in already went out of the market when we sold off. Michael, that's the thing. We expected this last week. We expected this since June. But if you look at the week's price action, we have 61.8 fib retracement of the rally that we had before. So even if we already anticipated this rate hike, people who bought in already are already out of the market. Well, if there's no rate hike, then certainly our knee-jerk response would be to dump the euro some more. A no rate hike scenario now would be a big surprise to the market. A no rate hike scenario would probably see you testing the lows for euro last week, the lows for your euro pairs for the last 2 months if you don't get the rate hike. Because trading the news is always about surprise. And if if we don't have a rate hike, we will have a market that's going to be surprised. I would think it unlikely though. Another rule that most good central bankers know is that you communicate with the market. Okay, you don't surprise the market. If you surprise the market, you lose credibility. You want to be predictable, and I think that was one reason why strong vigilance suddenly came out last week. Suddenly was mentioned by Trichet Monday last week. Well, guys, we're just 2 minutes away from this decision. Again, anyone who wants to preempt the rate decision, put a stop loss below the day's lows. We are looking for a textbook response to this rate decision. All right, we are just less than a minute. The currency. People who argue by the rumors of the fact. Well, I would point out that people who bought the rumor already got out of the market. So to me, buy the rumors of the fact is no longer an issue. The only potential excuse for a bear market now would be if we find the market concerned once more for ratings downgrades, default stories, and if we had such concerns, the stock market should be down. But the stock market is up, so I don't think that it is an issue at the moment. But anyway, just seconds away, guys. So let's see what happens. I'll try to shut it out once I see it. Let's just... Okay, looks like we're actually easing off at the moment. I don't have the numbers yet. Let me check the web. Okay, let me check sources. We are already a couple of seconds and we still don't have any print, any news flash. Thank you, Michael. So, as expected, 25 BPS hike. We're not seeing any big knee-jerk response. Thanks, Joynal. Okay, we're not seeing any knee-jerk response from the market. I guess now we will have to wait for the comments, as Joynal has mentioned. So what are the comments that we need to see? We need to hear Trichet talk about a focus on inflation. We need to hear Trichet talking about maintaining market vigilance, monitoring economic conditions. Now, we didn't get a sell-off, we didn't get a rally, although we are trying to bounce. Well, you know what? This is his second to the last announcement on rate decisions. By October, we'll have a new guy. So we're not really seeing a big response on the market, but I find it welcome that we did not sell off. So at least that confirms for us that buy the rumor, sell the fact is clearly not an issue. So what are we looking for? We're looking for, again, we're looking for comments on a focus on inflation. We're looking for Trichet to talk about monitoring market conditions. We're looking for Trichet to talk about strong vigilance. Even if he drops the word strong as long as he's vigilant, okay, as long as he communicates that we are keeping a close eye on how the interest rate story turns out. Now, some of you guys might be saying, hey, we've got a problem in Greece, we've got a problem in Portugal, we've got a problem in Spain, even in Italy, there's a problem. Yesterday's sell-off in the euro was because of the widening credit default swaps between Germany and even Italy and the rest and the periphery countries. Now, that really is not Trichet's problem. Okay, we have to make it clear that fiscal policy issues are not a problem of the ECB. They may try to help by keeping liquidity. They've actually been helping by buying lower quality bonds coming from the periphery. But the main job of the ECB is to focus on inflation, make sure that the long-term expectations and medium-term expectations for inflation in the Eurozone does not push above 2% in any sustainable period. It can go above 2% for a month or 2 or 3, but you cannot have CPI in Europe above 2% for a year or 2. If you have that kind of CPI reads, then the ECB would not be doing its job. That's why this early, we actually have the ECB already acting, trying to temper those inflation expectations. Anyway, we're not getting any market reaction. At this point, it will now be up to what Trichet will be saying in the press conference. We tend to think that at the press conference, he will talk about the three phases, or the three issues that we raised. He will talk about a focus on inflation. He will talk about market maintaining vigilance. Okay, that's actually a phrase, a code on telling the market inflation remains my main concern. As long as we hear those words from him, that would suggest that monetary policy in the Eurozone remains hawkish. And a hawkish monetary policy should have a positive impact with the currency. Now, what could force the euro to sell off? It won't be because of Trichet. If the euro were to sell off, probably it would be because your stock market is dropping again, which is not happening, by the way. I see that our CAC 40 is at 0.51%. DAX is at 0.45%. So we're not getting any sell-off in the stock market. What could see our euro sell off would be Moody's, Fitch, S&P opening their mouths and saying credit rating downgrade, saying politicians, what the finance ministers are planning is a form of technical default. Okay, these are the kinds of phases that could push your euro lower. But as far as monetary policy is concerned, as long as we hear those terms, as long as we hear strong vigilance, as long as we hear focus on inflation, then monetary policy is supportive of the currency. Well, anyway, we're not getting anywhere. Looks like we're actually easing off again in our euro, in our euro yen. Let me just say, I think even euro pound is easing off. But we're not really seeing any big drop. Again, there was no reason to, or there is no reason to, for a big drop at the moment. The only way that Trichet could force this market to drop would be if he suddenly talks about being more concerned about the European, about how the periphery is doing. Maybe talking about accepting lower quality sovereign bonds. Okay, that to me could drive the market lower. We're actually easing off slightly. Is it something I'd like to sell into? I'd rather not. If I'm going to change my mind about the direction of the euro, it will be if I hear more bad news from the ratings agencies, or if Trichet suddenly changes his focus later. So guys, any questions? Let me just take a look at those charts again. Let me find where can I get strong support. So Euro Yen, we are pushing below our 55th area for last week's rally. Trichet will be talking in 36 minutes. Okay, let me just review my charts, guys. So we actually have a new low in Euro Yen. I wouldn't correlate what's going on with the interest rate announcement. It's been 10 minutes. And if you actually look at the pips, we're only talking about a 22 pip move so far. Of course, technically, you're bearish looking from the daily charts, from the 4-hour picture, from the hourly level. But again, we doubt whether some big trader will be committed to short the market. Morally, I view this more as market noise. A segment of the market thinking, hey, we did not spike up. Maybe we should be selling. But I don't think that it would be a good idea to join this attempt to ease off. The way we've behaved over the last 11 minutes would suggest that most of the bigger traders remain sidelined. Most of the bigger traders are still waiting, trying to confirm just how hawkish the ECB would be going forward. Will we get another rate hike this year? Is the big question now for the bigger traders. So again, you don't want to just jump in because you start seeing your Euro Yen ease off. It would now be better for you to just wait for the press conference. If you jump in now, you might find yourself jumping in short at what could be the low. Although technically the signals are in your direction, you have more event risk going forward. You have another event risk in 33 minutes, the ECB press conference. Let me see Euro itself. Euro, okay, looks like we are approaching our support at 42.53. I've looked at that support as a strong level. Since our release, we've only seen, 25 tips of price action. Again, that doesn't sound like this is a market that's excited. So, you'd be better off not responding, not doing anything. But do keep a close eye on that strong support. If there's any push below that 42.53, 42.50 area, then technicals might just take over. What do I mean by this? That place is a good place to look for possible sell stops. A break of that 42.53 area might see some people jumping, thinking sell stops are getting triggered. So folks, any questions? So technically, you've got short signals from your indicators, but because we have an event risk, I would think we would be better off not doing anything. You may be easing off at the moment in your euro, but I don't think of this as a broad-based market response to what's happening. If we had people really thinking, let's just dump this, we probably should be pushing past our strong supports by now and not inching lower. The fact that we're just inching lower suggests that for the most part, people are still waiting to hear about how hawkish the ECB really is. Michael, I would rather focus on your NFP number itself. Remember that there's a very big discrepancy on between ADP and NFP numbers. If, of course, your ADP figure does turn out better than expected, then it could be an argument for having a stronger dollar. And what's the consensus for ADP, by the way? ADP employment change number expected at 70,000. I don't think that we should be too concerned about it. Anything that's good for the US economy should be good for the dollar. Anything that's bad for the US economy should be bad for the dollar. At the moment, okay, we took out our support at 42.53 in euro. Now would be a good time to keep a close eye on this. I would suspect that you will have some sell stops under that 42.50 region. If those sell stops get triggered, we could be talking about pushing for 42.04, 78.6 fib. But again, 42.53, 42.50 should be treated as a strong support level. Morley, Euro Pound also dropping. Yeah, it took out its own support level. But my problem with this is it's too slow that I don't want to take action. You have a technical breakout, but you also have an event risk going forward. So safest course of action, don't do anything. Next safe course of action, if you really have to, then of course you follow your technical breakout. But your risk is 28 minutes from now, when we have our press conference, you could suddenly spike up. You could suddenly change direction depending on how hawkish Jean-Claude Trichet will sound. So interesting, but not good enough for us to consider shorting. We're actually it seems that we are getting a stronger dollar. Hey Anita, dollar Swiss. We actually had some bad numbers from Switzerland earlier. I'm now thinking dollar Swiss has the chance to actually trigger this big picture your 85.31 region. Our actual trigger point, our strong resistances is at 851. I'd look for dollar Swiss to push higher. We are starting to get good numbers from the US. Because QE2 has ended, we now think of good US data as good for the US dollar as well. The dollar no longer makes a good funding currency. Hey, the US government is having trouble finding money. So why would we look at the dollar as a funding currency still? So because dollar is no longer a funding currency, we tend to think that we may have seen the lows for USD CHF already. We may be at the brink of a turnaround in the long run for dollar Swiss. As far as the next day or two is concerned, my focus would be on getting to the 85.31 region. All right, guys. Questions? Again, we have already seen our rate decision. We may be easing off right now in euro, but we tend to think that's more a dollar issue. We've got a stronger greenback. 9 minutes. This is your ADP employment change numbers. Consensus forecast for that is calling for a 70,000 read. If we get enough. So, questions, comments, concerns. Otherwise, I'll just once we've got the press conference going. Again, here's the link for that press conference. Okay, thanks for joining, guys, and see you next week.